ICT advanced tutorial with your boy. My name is Prince Omari. Welcome to my channel. If you guys like what I'm dropping for you, just leave a comment on the comment section below, a like, and subscribe to the channel for more content. So today, man, we're going to take a look at a derivative synthetic called Volatility 91S. Now this particular instrument is fairly new. Its conception actually began the beginning of this year. On the 1st of January, this particular instrument was added to the catalog of instruments that this broker provides. Now Deriv offers multiple um, markets for everybody to trade in. It's really up to you. The choice is yours to choose what it is that you want. And I just want to debunk a myth. I want to talk about how people have had this idea around synthetics that is just completely wrong, and I need to debunk it right now. Derivative synthetics are not fake markets. There's no such thing as a fake market, because if that's the case, then the same markets that you guys are trading in, the currencies, the gold and the bitcoins and the cryptos, then all of those are fake markets. Because I think as long as you are having your chart is being transposed, and the price action behind what the chart or price action behind what the particular instrument is doing in that moment is being overlaid through time and price. So we have our time delineated by our x-axis right here, and the y-axis is our price, right? So as long as you're looking at something like this, a chart, right, it is being transposed to you electronically. Initially, trading wasn't done electronically. So by virtue of it being an electronic algorithm, it means you are being manipulated, right? You cannot do anything to change price. You cannot manipulate price. Instead, it is you who's getting manipulated, and your sentiment is what's getting manipulated. It's not the chart sees your stop and it runs to your stop and goes in your direction. Those kinds of scenarios, those are probable scenarios, yes. In the grand scheme of things, you get to learn to adapt to those kinds of scenarios and become well versed in how price action actually operates. Alright, now I'm gonna start off from the monthly chart, and what we're gonna take a look at on the monthly is how we have our price action being transposed. Now I'm not gonna do what I did with my previous video, where I took out everything on my chart and started on a bare bones chart, because I feel like that's gonna be a lot of work. I'm just gonna explain each one of these things that I've delineated on the monthly with my narrative in mind, right? I always have narrative in mind. Alright, so let's start on our highest time frame, which is the monthly. And on the monthly chart, guys, when we're looking at the monthly chart, what I always like to do on the monthly when I start out is to mark out my highest high and my lowest low, right? What is my highest high? Well, it is the highest point that the price has printed on the chart, and the lowest point is my lowest low, right? The lowest point that price is printed on the chart is my lowest low, right? Because it's a monthly, it's still a very macro perspective of price chart. You're looking at a very big, you're not necessarily zoomed in, you're actually you've magnified and 3 times to what actually price is doing and deliberating in between the weeks. And it takes a long time for a monthly chart to print, right? Each month's candle may take a relatively a certain amount of time for it to print a particular candle, whether it's bullish or bearish, right? So now let's start on the highest high. I've marked out with this horizontal line here on the top, indicated by the wick of this bearish candle here. That is my highest high. And my lowest low indicated by the wick of this bearish candle here, right? The lowest low, the low of that candle is my lowest low, indicated by this horizontal line right here. Alright, so what I do is usually I take a fib and I run it across those 2 points respectively, and I try to find my equilibrium. So between those 2 points respectively, where should my equilibrium reside, right? And my equilibrium, according to my my Fibonacci projection, is giving me that. So this is my equilibrium. Can you see it's written equilibrium right here? So that's our 50% is at the sorry, 24982.140 level. So we're gonna pay attention to that level as we continue with our analysis. Alright, so now let's move into what since we have that price range indicated by high and low, in the middle is equilibrium. So anything above 50% or equilibrium is considered a premium. Right? So anything above 50% is considered a premium, and anything below 50% is considered a discount. Alright? So because we have those ideas being transposed on a monthly chart, it becomes easier for us to understand what the order flow is doing. Institutional order flow is what's going to give us the reference points for PDRAs on a higher time frame. So either you're looking at it on the lower half of the range or on the upper half of the range, regardless of which time frame. Because we're starting on the monthly, it's the highest chart that we can look at this price action relative to the chart, and when we drop down to the lower time frames, the same information gets transposed still. All right, cool. So now let's look at excuse me, inside of our 50% below equilibrium is our our discount, right, area, right? So we should look relative to which PDRA matrix are we looking at. So now, since because we're below the 50%, we are looking at a discount. We must now look for PDRAs that exist within that matrix, right? So what do I mean when I say PDRAs? Well, for you to be able to identify a PDRA, you need to have some kind of market structure, right? And lucky for us, we do have market structure here below the 50%. We don't have as much market structure for us on the upper end portion of the range, because that was just a pass through, right? There was too much speed and momentum for price to want to get down to a level that it did not provide in sufficient price action for us to say this is where we can start looking for PDRAs on the premium. So we don't concern ourselves about that. The only PDRA that exists on the premium side that is of value is this feather gap indicated by this green shaded box here. That's the only PDRA that we have on the premium side, right? But on the discount side, we have a bunch of PDRAs that are overlaid and being transposed, but what price action is currently doing and what it's attacking. What kind of liquidity is it attacking? Remember, price will always seek liquidity. When it's seeking liquidity, it's seeking it above old highs or below old lows, or it is, you know, closing in on a feather gap, right? Closing in on an imbalance that is left on the buy side or the sell side relative to what the price is predisposed to do, or it's attacking, you know, it's attacking liquidity up above old highs and below old lows. Okay, so premium array, PDRA, feather gap, there is a potential for price to want to go into that level eventually. in the future, right? There's potential for price to go into that fair value gap in the future, right? But it will meet it will meet resistance along its way, right? Because these areas where price is already printed and where confluence of these areas is that they will act as resistance as price gets into them, right? For example, when we had the sell candle here, this bearish candle print, immediately it closed near the low, and then the next candle that opened, it rallied into the body of that candle. It doesn't completely mitigate this fair value gap. It only touches it by a bit. And sometimes that is all you need. That is enough for a setup, and you're in. You aim for the break of structure below this low and you're out. You can do that, right? But you need to find these setups in hindsight, because when you're looking at the chart, you're only seeing what is being relayed to you in that particular moment, right? But you use these PD arrays and these areas of confluence to find setups that are suitable, that you can potentially take in any time frame, right? Whether you're scalping, whether you're short-term trading, or whether you're swing trading, even position trading. There is somebody right now who's holding a position from this bearish order block here, this bullish order block here. It's a bearish candle. There's somebody who's being profitable inside of this right now, and they're holding positions, and they've positioned themselves. They saw the buy well in time. They got in at a very good area. What is a good area? Well, you want to be able to position yourself properly. So he will find a PD array, a discount array that is still holding right now, right? So that person is being profitable right now. There are other people who are getting inside of these moves, these smaller moves inside of this monthly candle on a daily. And those people can either do short-term trading where they're holding trades for like a couple of hours, or they are scalping like 5 minutes, 10 minutes, 20 minutes, they're in, they're out. You get what I'm saying? So it depends really, but everybody is utilizing either one or two or three or more time frames for that strategy, right? That strategy is the one that's giving them the inclination to take trades on a particular time frame, just like how we're going to be doing today. Because today my objective is for us to find a trade, potentially execute it, and we will see how far we're willing to go with that. Now that I've already explained the premium matrix, I'm going to explain the discount matrix, but I'm going to explain this balanced price range as well. This balanced price range, inside of it is equilibrium, right? So that level is sensitive, okay? It's sensitive in the sense that anything above that horizontal line is premium, and anything below is discount, right? So if price comes up to that level, we should expect some kind of reaction. Not a reaction in the sense that it should want to now reverse, or it's going to. A reaction can be anything. It could run through that level and show us for a yeah, that level was primed to get taken, or it could just bounce off a little bit, use it as a resistance, right? And then immediately turn that resistance into support by running through it, and then bouncing on top of it, acting as support to close in that pivot gap. That's all I'm saying. So we pay attention to these levels. All right, cool. Now this pink shaded area here, indicated by this pink box, our extended, is a mitigated fair value gap on the sell side. So here we have sell side imbalance, buy side inefficiency. Price wanted to close it in. It's currently trying to do that with the current month's trading candle. It's printing. It's willing to want to close in. So that is our current objective, right? So Rona, all we need to do is get something like this. All we need to do is get something or somewhat like this, for price to move from where it's currently at and close in that fair value gap completely, because it's already in a buy program, because it's already a bullish sentiment in the marketplace. Price is willing to get up to certain levels. Now the best case scenario is for us to see price actually tap into 50% of the price range from high to low, which is that equilibrium that we have denoted by this red horizontal line. Right? So that is our best case scenario. Our worst case scenario is that when price gets to that level, it has the potential to reverse again and continue on a sell momentum and completely disregard any PDRA on a discount this side, because it will have bought enough to a level where price can be allowed to be sold again. When it gets to equilibrium, it gets cheap, right? It's no longer, it's getting expensive, sorry, not cheap. When it gets to equilibrium, close to where the premium arrays would reside, the sell pressure becomes intense, right? So we don't need to worry about that for now though. I'm just giving you guys multiple probabilities. Remember, as a trader, you deal with probabilities. You're not dealing with hunches and, or this is a gut feeling, this is how I feel. Like, don't get me wrong, intuition is important. It is important. It is my recipe. I use my, because I'm a Cancer, and I mean, I am a I consider myself a very intuitive person. My intuition is always on point. It's very rare for anybody to actually lie to me and then I'm not able to pick up any kind of sense of dishonesty, right? It doesn't mean that because I have the ability to be intuitive, it means that that's what's helping me with the market. It's just an element being that is actually complementary of my strategy. So I only use it in certain case scenarios. I don't use it all the time. The strategy is the one that's actually giving me feedback of where and when I should get inside of a trade. Alright? So let's get down into understanding the other delineations that I've made. Alright? So when price came from January 2025, from sell side, it was dropping. It broke structure once more. It retraced for a bit, broke structure again, and then inside of this consolidation, it swept below a low. It swept below the consolidation and then immediately pumped in the opposite direction, right? So it reversed, right? So this break of structure here, break of structure here, and then a sweep, right? So it's sweeping here. Now sweeps are important because that's where it's going to give you indications of where the price was more was primed for a market structure shift, where it was being primed for a market structure shift, right? So the price actually reversed here, broke these highs, broke above these highs, so it immediately changes the narrative here. So from a bearish institutional order flow, we have shifted and now we are on the bullish institutional order flow. So anything we look for, we're looking for buys only. Alright, cool. We have a projection that is indicated by this horizontal line here. So that is our projection. That is what we expect. We need to find a setup inside of that expectation of a projection that price will potentially do and will potentially print in the future. Alright, so now that we have that sweep indicated by this push into that low, price immediately snaps back and starts to buy. I get so this bearish candle here, the last sell candle before the buy, that is my bullish order block. So I treat it as such, which is why I have my gray box shading the entirety of that candle. I do not shade the rally up because when that price, the wick of this bearish candle here, when price opens up after this bullish candle and then it rallies up just for a little bit before it drops, I don't consider that part of the candle in terms of change of state of delivery, right? I consider the volume from the the volume from the open to the close or the low, that is the volume, the bulk of the volume that becomes the change of state of delivery, that becomes the order block, right? So for me, that's just how I usually interpret order blocks. So you guys, some of you guys are confused about what order blocks are and what essentially they are meant relay, what kind of information are they relaying to you, as opposed to the definition of an order block, the way that a lot of people have been confused by. All right, so you guys should go back and watch ICT. If you guys are ICT students, you need to go back. If you're an ICT student, you don't just understand his material in just one day. You go back again and again and again and again and again and again until all of his concepts, like everything, you can understand it clearly. It becomes part of you in some way. All right, then nobody can take it away from you. It becomes knowledge that you've ingested. It becomes part of you, all right, as a trader. All right. Okay, so this fair value gap here on the sell side, that is indicated by this pink box, is still, it's mitigated in the sense that this price action here, indicated by the wick of this bullish candle, it stabbed through that fair value gap, but then the volume was being kept below the low end of that fair value gap. The current month's candle is printing bullish inside of that fair value gap, so it's kind of like mitigated, but it's not been mitigated yet. So there's still a need for price to want to get and close it in, because we're still bullish. Okay, so that's why I've shaded it pink. It can change, it can still go back to green. It's just a matter of preference. It's not really anything that you guys should be concerned about. Now these other delineations here, these smaller yana delineations, we will get to see them as we drop down in the lower time frames. So for now, this is narrative, right? On the monthly chart, we always take our narrative from the monthly, right? So everything that we anticipate about price action, we derive it from the monthly, right? We have a price range indicated by high and low. We have equilibrium. Price is below the equilibrium, so it's in the lower half of that price range, and that is discount. So it's pressed. It's in very deep discount. You know what? Let's just measure it for completeness sake. Sorry. So I'm gonna measure that price move. I'm gonna measure that price move from low to high. Alright. Now we'll go see how deep in discount we really are relative to the low and the high. See how very deep we're in, like 79% retracement. So on the monthly charts, this is what you guys need to understand. When price is stepping, especially on a monthly chart, it is not going to step the same way that you would see it on the weekly. On the weekly, you start seeing things like retracement, going back to a daily order block, reestablish more positions, and then it pushes. On the monthly chart, these monthly candles are enough for any kind of price action to take place within the candle itself. So the fact that we've already seen a reaction around the 79% retracement of that bullish order block here, with this candle stabbing inside of the body of that candle, and then it started to buy, this is just enough. Price can just continue to print bullish candles just like this on the monthly chart, and it will still be okay. You get what I'm saying? So now what we're simply doing is we're just measuring its intent. Alright, so we're in deep discount. We expect the price will want to come back into 50%. We're already seeing a market structure shift, a reversal, and we've already verified one order block that we can use for context or reference. Alright, so let's move down to a lower time frame on the weekly. And you can immediately see my green box has disappeared, guys. My green box has disappeared. The one that was here on the upper end of the fair value gap. So I'm gonna mark out another one because we're on the weekly, and it's, I feel weird if it's not there. I feel like it needs to be there. Alright, so we have that fair value gap, right? This one we're already mitigating. You can see it is. So guys, now let's move. You can see now on the weekly. Hang on, let me just try and extend. You can see now on the weekly, the price becomes easier for us to take a look at, right, and make sense of. Alright. Let me just straighten out my line. This line is very important, guys. This one, that horizontal line, yeah, you guys will see, like, it's a very important. Now, if you've seen price action for as long as I have, you can see moves happening ahead of time, right? You can see them like in time, and you're just like, yeah, this is about to happen. Just, you know what I'm saying? Yeah. So here, it's the 1st of September. The time is 1 past 12. See a lot of ones. A lot of ones, man. I'm only seeing ones and ones and ones and ones. And, yeah, man. Telling me I gotta be doing something. Alright, let's take a look at how price was being delivered on the weekly chart, right? So now we have that pass through by that month's candle. We see it on the weekly. It's still another week long candle where price was being pushed and pressed to a level. Once it moved into a level, remember that balanced price range that I was talking about, right? Here we see it as a consolidation, but the consolidation keeps pressing lower and lower, right? So price was being squeezed around this area, being offered for the buy side and the sell side efficiently before it sold once more. So that was just how much they were willing to allow price to actually be, offered for both sides of the marketplace. So it bought for a little bit Liana here. You can see with this bullish candle, it bought into that fair value gap. The next bearish candle, the high of that candle doesn't even violate the previous high. It immediately slams through the low of that bullish candle, indicating that the pressure is too high. So it just went above enough to tap that fair value gap, and then it slammed, right? So that means that price was still revving to go lower. It was still predisposed to go lower, right? So we use that balanced price range as a consolidation that was indicating what the move was essentially for price to want to get down to levels, right? So when price retraced, it slammed. Retraced once more, but this bullish candle that looks like a morning star, or it's like a doji at the same time. But price was only allowed to go to a certain level on the buy side before it sold again. Boom. And then we got that fair value gap begins right here at the halfway point of the body of this bearish candle. Price kept pressing lower. It opens, presses lower. So there's a fair value gap here. We see it on the monthly, but you can see now on the weekly that there is this wicking back and forth. So price was efficiently delivered on the weekly, but we still see that the monthly warrants us a need for price to want to get back into that level because it left it as a space on the monthly chart. So it's still an imbalance on the sell side that is being viewed on the monthly, right? So you can see it right there. This whole pass through of this month, this bearish candle on this month, I think is around February into March. Let's just say maybe it was jumping. It was the March candle, right? So the March candle has 4 weeks of price action. You can count 1, 2, 3. I mean, we could start from here and still have 4 weeks of price action, indicated by the pressing of the volume of the bulk of the volume of the candles is being pressed lower and lower, right? Until we got to a certain point. We swept below a low of a consolidation. Remember I said that this is a consolidation here. Price came below that consolidation and reversed and started to attack the buy side, right? So they went for the lows first. They attacked the sell side, accumulated those orders, and then started to pump. So price started to now shift narrative from bearish to bullish, right? So you can see it clearly on the weekly, sorry. It's no longer as it's not as clear on the monthly, but on the weekly you can see that there was a lot of weeks especially here in this consolidation before it broke out below the low. You can see there was a lot of sentiment around price being offered back and forth. Orders were being allowed to build on both sides of the market. So liquidity is above these highs and below these lows. Price was getting pressed and pressed, and eventually it took out the lows. Took out the lows one more time, and then it reversed, attacked the buy side. Right? So this is buy side liquidity, these equal highs here, and price is now revving to go higher. Right? So what we're looking for, or now what we're looking for now, is we're looking for this kind of like movement. We're looking for this kind of movement. The price is breaking structure to the upside with that, and then it retraces, break structure, retrace into a PDRA, break structure. Because that's how it's moving. If you guys can't see this, you need to see it. Yeah, I can't. This is what we're seeing on the buy side. So price initially, remember that gray box that we had from the monthly, that bullish order block? We're inside of that bullish order block. Okay? And inside of that bullish order block, what am I looking for? Well, if we go back to that consolidation and we see the lows that we just swept, we're going to look for the order block inside of that sweep that validates our buy, right? And what is it? It's this bearish candle, the last sell candle before the buy. So the change of state of delivery happened around here, because when we started to attack the highs, it already confirmed that okay, we were buying. So initially, the first move to buy into the buy side, to attack the buy side, it started from this bullish order block here. It's a bullish order block inside of a sweep, inside of a bigger monthly order block. So there's a layering effect that is taking place there. A lot of confluences. So it makes sense that that's that candle, right? And I have it indicated here with the purple because it's a very, what can I say? It's a valid candle, right? It's the most valid order block that we can potentially find on this chart, right? Other order blocks get ran through anyway. You get what I'm saying? So like this one is getting ran through here. You get what I'm saying? This last buy candle before the sell, the push down lower, is a bearish order block. It got violated by this bullish candle here. So it's completely out of order. It doesn't work anymore. But this one is currently valid, right? So when price started to pump, right, initially before it showed us any kind of indications for wanting to attack the buy side, so any reference for a change of character hadn't happened until later on when we see that price ran through those highs. So when price was here initially and then it started to buy, you see how it retraced back. When it bought, it retraced back into the body of that candle. Price was very sensitive. That's why the volume was only allowed above the body of the candle. It wasn't allowed to go below. The wick is just how far it was willing to reach into the order block to accumulate more orders, right? And then now it started to press, giving us indications, okay, we want to attack the buy side, right? So they started to attack the buy side, and then they allowed another retracement. Remember what I said, you see? Impulse correction, that's what we're looking for, right? So price is now correcting from this high, right? So now if I was looking for an opportunity, I would have measured each one of these price extensions accordingly to the retracements and get an idea of where price is more likely to be sensitive. So from this price extension from the low of this candle here, which is our bearish candle, bullish order block, that is inside of that sweep, to the high of the wick that's inside of this month's candle, bullish order block, indicated by this gray rectangle, that wick, right, before it went back in and stabbed. Look at how it stabbed right through equilibrium, 62% retracement, OTE, and even 79% retracement. So it was like a rubber band. It was getting ready to to start pumping. So it was collecting momentum, right? So see how sensitive the price action was being to that level. So this was the only opportunity to get inside of any kind of meaningful buy, right? Now let's say perhaps you missed it. Né? This is a weekly chart, guys. We still haven't dropped down. I'm still explaining a couple of things before we drop down, because right now what we're doing today is we're looking for a setup. I get. So our next high to use is the high of the extended leg in the break of structure prior to this impulse. So we're looking at it in hindsight. We pretend that anything on the right we haven't seen yet. Alright? So let me take the anchor, still anchored to the low of that bearish candle. We're gonna go and anchor it to the high of the next extended leg. Right? We use, I get it, this one is no longer valid because price has already ran through it. So the any opportunity to get inside of a buy would have been missed. Right? So now we're extending our Fibonacci to get another opportunity for an entry. And let's see if price ever does come back to equilibrium, let alone does it ever come back to 62% retracement, OTE, and 79% retracement. It does not. It does not give you another opportunity, right? It misses you just by a bit. You see how this bearish candle here, which is the retracement, right? You might not see it on the weekly, but there's a retracement in there, and price barely comes back to equilibrium. So perhaps you were looking at this on a higher time frame and you didn't get an opportunity, and then you just left it. Ne? So there's a space. Ne? So price was revving to go higher. So there was nothing that anybody could have done at that point. Some people are able to find setups because this is still a weekly. It's still relatively large in terms of the time frame. So there's still opportunity, ample opportunity to find these setups if you know what you're doing. Okay, cool. So now that we have a break of structure above the high that we anchored to, and look at that break of structure. It's a valid break of structure in the sense that it not only violates the high that we came from, the one that we're anchored to, it violates even the next ones. Remember the change of character that I said on the monthly is being indicated by the weekly. We see it indicated here with this horizontal line. So price runs through that aggressively. It runs through it so much that it comes to this high. The swing point here, indicated by this bearish candle, the wick, the high of that candle, the bullish candle next to it to the left is lower than the high, and then the bearish candle to the right next to it is also lower than the high. So that's a swing point. So when price attacked the highs, it even attacked that high, that swing high. So once it did that, it said, okay, it's like it's breathing now. You get what I'm saying? That's why there was this retracement here, right? And yeah, so guys, this is now where I'm going to now explain to you why is now price giving me indications for it. It's extremely bullish. Initially, now I was like, it is bullish. I wasn't on the like it's extremely bullish. Yeah. Why would I use extremely, the word extreme, to explain this? Because when price is either bullish or bearish in the sense that order flow, it will always have these spaces where it's not giving you much of an opportunity to get inside of an optimal trade entry, right? So let me take my fib anchored from this low of this bearish candle. I'm gonna move it to the next bearish candle. What did I do? Oh shoot, I removed my thing. Before I do that, what I'm really trying to do is get rid of my fib so I can explain something. This gray shaded box here is a monthly order block. This purple shaded box here is a weekly order block inside of the monthly order block. So there's a layering effect. There's another order block on the monthly. If you guys can't see it, I'm about to show you. It's this one, this bearish candle here. So I've marked it from the open of the candle to the low, which is the wick, to the low. Because we're in the buy, or inside of the bullish institutional order flow, I'm always referencing that PD array to the most minimum threshold is usually the open. If it's a bearish candle, it's usually the open. It's never the high of the wick, because that's where the volume lies, right? So now when I saw this buy here, I said, okay, cool. I will wait for a retracement back into a pretty array, right? And I will get inside of the buy, and I will just let price do its thing. Ne? Unbeknownst to me, I didn't know that price was actually extremely bullish, right? On the weekly chart, you can see price is actually extremely bullish, because when it came back to when it retraced, it retraced to 50%. I'll show you guys right now. I'm gonna take the fib once again, and I'm gonna anchor it to the bearish candle, the low of that bearish candle. I'm gonna anchor it there, and I'm gonna measure it relative to the high of the range that we're currently in, right? And you can see that price has already tapped into equilibrium, right? And once it did that, it said, that's enough for us, we're going. So it doesn't completely mitigate this fair value gap that we have here, that I have shaded in pink. I have it shaded in pink because technically it has been mitigated. It's been allowed to see some sufficient price action stab into it. And one more thing, uh, remember I said we're using layering effects to confirm our areas of confluence. This break of structure above these highs is significant. Alright, that area was resistance. Remember how price was pressing against it and wasn't allowed to go above it prior to the consolidation breaking out of, because when it broke below the lows and took out the sell side, it attacked those highs. So anything that would have been considered resistance above these highs has flipped on its end. It's now become support. You get what I'm saying? So this is why I have this red horizontal line indicated here. So when price stabbed into 50% of that fair value gap, and there's a name for these fair value gaps when they get used for institutional order flow: inversion fair value gaps. So this is my inversion fair value gap because it doesn't really truly get fully mitigated. It only gets half mitigated, and then price says that's enough. At the same time, what price is doing here with this candle here, it's running out a previous low from the previous week, right? It's running out that week's low inside of that fair value gap. It's right on top of that resistance turned support, and price is sensitive to that because it's buying, so it's predisposed to go higher. So there wasn't even a chance for it to get to a PD array, which is this bullish order block here. So we completely missed the entry. You get what I'm saying, guys? So this is what's indicating to me that price is extremely bullish, because it was enough for it to get outside of this bullish order block here on the monthly, and then continue to press higher and higher. So right now, what are we doing? We follow institutional order flow, guys. So let me just get rid of these, and then we move down to a lower time frame, and we can see more context behind the kind of things that we're looking for. Alright, I'm gonna leave this one because that one was our initial projection from the monthly. So we're just gonna leave it there. And you can see now, you see how price was only allowed to get to 50% before it started pumping. The next high, or the next probable area for liquidity to get taken, is this high, right? Because we're still bullish, yeah? So we'll look for buys. Alright, so this is the weekly, guys. You keep it simple, don't make it complicated. This is just as simple as you need to get it to be. Alright, so let's move down to a daily, and then we can start seeing more context for reference of, sorry, I just shifted the chart. Alright, cool, we're back, and we can get more context, and we're looking for a setup, isn't it? Let's go to the daily and look at the daily, man. I love the daily chart because it's a good bellwether for finding these specific areas of influence or confluence, so to speak. So on the daily, we can see that sell side. We came from that sell side, a fair value gap indicated by this pink box here, just below equilibrium of that price range that we have delineated on the monthly. Well, inside of our discount array, or sorry, not discount array, we're inside of a discount relative to the price range from low to that high that we have on the monthly. So you can see this is our consolidation that I mentioned earlier. You can see how price was consolidating up, down, being forced in between extremes before eventually it took out the lows. So these highs were suspect. They were equal highs that were eventually going to get taken, and they get taken, right? So we can see that when price initially goes for those lows below the consolidation, takes out those lows, it sweeps. So I mean, we could do let's do a market structure on the daily. I haven't done it properly, so let's just do it properly for completeness sake. We're gonna do it together. Alright. We're gonna do the market structure of the consolidation that we have uh, denoted on the weekly and on the monthly. And we're gonna try and find where is our area of confluence most likely to reside. So this low gets ran out, price retraces back into fair value gap inside of a sell side buy side inefficiency inside of the sell side imbalance. Boom, it breaks structure again, retrace it, it wicks below, so it wipes, and then it wipes again, and finally wipes for the last time. Right, so we can just, I mean, I'm gonna mark out this for sake of being complete. Right, so each time I mark out these levels, I'm always paying attention to both sides of the order flow, right? If it was selling to break structure below the lows, each time it retraces, I must find some kind of premium array, right, in which it reacted. In this case, it's this bearish order block here, this breaker here, for this push down, that's the breaker, reacted off of a daily breaker block, right here. Can you see that? You guys see that? It hits it to the pip. Like it hits just below the low. I know for some people that might not be significant, but it is, man. It is significant. Here, when price broke structure, it retraced back into this order block here. So you see the same way that this fair value gap here wasn't really mitigated completely. It was only, price was only allowed to tap into it for a bit before it sold. And when it came back to that area and that level again, it was sensitive to it, so it sold once more, right? But this time it swept below a low. It didn't break structure, it swept. It was being kept inside of this range, right? Before it finally broke structure once more, right? So there's a lot of sweeping, and then break of structure once for the last time, and then it gave it a change of character that we were initially looking for, right? Now you could have seen this happen on a daily chart, and you saw it when you were down here and you got in inside of this position. A lot of people would have been scared though, because it was selling, like, how am I gonna buy if this thing is selling like heavy? It's breaking structure below the lows. How would you know, right? So for me now, I would have waited first for this order block to get validated. It would have needed time to pass first. It would have needed for time to pass first in order for that particular candle to print, so that I would know that that would be the valid choice, right? So now wouldn't have been like very aggressive initially, right? So let's take a look at since the narrative had already shifted, right? And once price broke below this low and then started to attack, it attacked this buy side here, attacked this buy side, attacked this buy side. It attacked these highs here with the push up. It came into a level, it consolidated, pushed again once more to close in that fair value gap that I told you guys about on this sell candle here. Right, so this bullish order block, this bearish order block here gets completely invalidated. Because what price does, it actually pushes against that order block. That breaker block doesn't become valid at that point. So here, that fair value gap gets closed in, right? And then once it does, let me just do it so you guys can see. I mean, some of these things I can see them, and I usually, it's boring for me to just keep noting them when I know what I'm looking for. I'm not saying I don't want to help you guys, but when I know what I'm looking for, I'm gonna leave it as gray so that you can see. You see, that's the fair value gap, right? Fair value gap gets closed in, right? On the sell side, it gets closed in. So there's allowance for price to retrace, right? So what do we do when we see this? We measure. We measure our extension with a fib tool from the low of this bearish candle to the high of that bullish candle that we have indicated by those two highs here. These two highs, this is a daily chart, so that's still very clean highs, so there's likelihood that there's liquidity above those highs, right? But look at what price does when it retraces. It retraces back to equilibrium into deep discount, 62% retracement, past OTE into 79%. Look, almost perfectly at 79% retracement. But that's only because this order block here. Can you see it? This last sell candle here, that's where they were allowing price to come back to. So deep discount relative to what they wanted to do in the future, right? The potential projections for a buy model take place inside of this order block here, right there. So price was being driven to the lowest. So this was the opportunity to get inside of a very good buy. If you were position trading, it would have been good for you to just get inside of this and just hold it and just leave it, right? When was this? Well, this was in between the 11th of July and the 19th of July. A couple of months back, because right now we're in September, August, September, July. So 2 months ago, right? You would have gotten inside of a position, you would have position traded, and you would still be holding. You get what I'm saying? That's how good these synthetics are. They allow you to be any kind of trader, basically. All right. So now that we've measured our extension, you know what? Because we're doing market structure here, let's continue to market as we're doing these extensions. So those highs were suspect initially, they get ran out. Can you see that? Price is allowed to come back into deep discount relative to the price range indicated by this low to this high. And then once it hit 50% right there, 62% retracement, 79% retracement, it bought, right? Showing us willingness to now start attacking the buy side, which is what this is buy side here. Price wicks above, sells just for a little bit, back to a PDRA on a discount. Where is that PDRA? Well, we can use this bearish candle here as a bullish order block right there because it's inside of the retracement. So internal um, from internal liquidity to external liquidity. So price was retracing back to internal liquidity, right? Internal liquidity is resting inside of the range defined by the extensions. So from this high, from this low to this high, we retrace, right? So inside of that retracement, before price started to show us willingness to go higher, because it did so with this candle, it pumped. It came to a level, it fell short of those highs. It fell really short. but it showed that there's still willingness to want to attack those highs, which means the narratives have shifted. It's no longer bearish in the sense that we retraced here. It's now going back to the bullish in the sense that retracement was enough for it to collect more orders, and now it's starting to pump. It allows people to get in after it sweeps those highs. People get in again inside of this bullish order block. It buys, right? So we have another area and another extension. So we're going to use that same principle. Now I could use the wick of this candle, the one that follows after this bearish candle. I could use the low to anchor my fib, right? Let's just do it. And then we measure the extension from that low to the highest high after the break of structure. So the break of structure happened here, right? Took out these highs, took out these highs, yeah, right? And then it retraced. What did it do? Did it retrace just to any normal level? No. It needs to retrace back to a PD array. A PD array always starts at 50%. 50%, anything below 50% is discount. Anything above 50% is premium, right? So when price now starts to tumble, right? It starts to tumble relative to the price range that we've now had this extension, this fib. Inside of these little consolidations, when price is retracing, you could find an opportunity. So price comes back once close to equilibrium and falls short of equilibrium, so it doesn't necessarily fulfill any kind of objective for the buy side. It's still selling, so it wants to come back again, right? And what does it do? Well, let me get rid of the fib. It runs out this low, yeah, all right? It runs out that low, so I'm just gonna copy and paste this horizontal line. It runs out that low and then taps into 50%. Can you see that? You guys see that? And then what does it do? It hits another PD array, which is this bearish order block. Sorry, bullish order block. It's not a bearish order block, it's a bearish candle, but it is a bullish order block. And it just falls short of it just by a pip, but that was enough. As long as it hit 50%, 50% is enough for price to continue to rally. Yeah? It doesn't need to completely hit it. It can come just as close as we see it right here. You see how it misses. It really misses that order block by a bit, just a bit. And to be honest, I think it really touches it just at the top of the high of that wick, and then it continues to buy, right? So the pressure is intense. It's heavy on the buy side. So there's a lot of buy momentum now in the marketplace. So now since when I opened the chart, I saw this. I saw prices potentially wanting to buy higher and continue buying higher. I was expecting, so now my strategy, what it allows me to do is to find these perfect, I don't want to say perfect because I think I'm going to lose a lot of people in thinking that every time you want to trade, your setup needs to be perfect. Right? It doesn't need to be perfect, but the rules and guidelines that allow your strategy to fulfill what it's meant to do, they need to be as strict as possible, right? They need to be strict, or if you don't have rules, if you don't have regulations that guide your setup analysis, you're gonna have analysis paralysis. You won't know what to do. You won't know when to be on the sidelines. You won't know when not to trade, and so on and so forth. Alright, cool. So price break structure, and it buys. This is the biggest buy that we see on this price chart, right? Indicated by that bullish candle here, right? So it buys completely, and then it runs out that high that we have on the weekly, right? It runs it out, runs out these highs, runs out that high, right? Inside of that fair value gap, once it gets into that fair value gap that we saw on the monthly, it reacts. Obviously, it's reacting, né? Because it's hit a premium array above the marketplace. Why is it a premium array inside of a discount range? Well, because it is a sell side inefficiency. It's a buy side inefficiency on a sell side imbalance, right? So because it was sell side, the pressure is still intense in terms of selling pressure. So there's bound to be a reaction. But see how the reaction just bounced off just a little bit? There's still bullish momentum in the marketplace. There's incredible bullish sentiment in the marketplace. So price wasn't even allowed to get to a PD array that we could be allowed to participate in. Like that. Why do I say that? Well, let's continue with our extensions. We've already measured from here to here. Retracement back to 79% retracement here. It pumps once more. Break structure above these highs. It retraces back to equilibrium. So you see now there's a difference. There's a difference in terms of ratios. I'm going to talk about something that I've observed on my own as a trader. When order flow is in play, institutional order flow is in play, usually the objective that price is currently trying to attack, depending on how quickly it wants to attack that area or is trying to get to a level, these ratios are going to be indicating to you what is price, how far price is willing to retrace for you to get an opportunity to enter. So here we see that price was actually allowed to press into 79% retracement, deep retracement. Why? Because this order block here is very low. It's in that lower end. So for price to continue buying, it just needed to come and touch it just a little bit. So that's where they started the buy program. The second time around, they only allowed price to get to 50% because they still had more upside to go. Okay? They still wanted to attack more liquidity that would be resting above the highs. So price was only allowed to get to 50%, right? And below 50% is an order block. It barely touches that order block, like I said, but it does fulfill the PD array that's existent inside of that price range, right? So now we have a new price range. Again, we're still following order flow. We don't know if this has happened yet. We only see this, the extension, right? So we'll measure the extension from the low of where the retracement ended inside of that order block. So this is our low. So I'm going to anchor it to the lowest low and measure the high. And you can see how far was price also allowed here on this same extension for it to get bought. It was only allowed for 50%, so the same thing that happened here. Jaanong nna mathata with this particular price move ke gore e rile ga ke bona the 50% why this initial price leg here, this extension here, when I saw it come back into 50%, it ran out a low, ne? It ran out a low, it closed in a fair value gap, and then it tapped a PD array, a daily order block. It tapped it. So now there were three things that were happening at once for me to actually validate this as a buy. Yeah, no, because now I was looking for the same kind of scenario happening here to happen this side. What now I was doing, I was initially waiting for price to come back into deep discount, yeah? Tap a PD array on any of those Fibonacci levels. But there isn't a PD array except at 79% retracement. But 79% retracement is very deep discount. Does price need to be that deep for it to get to a particular level that where price could be allowed to be bought? No, it doesn't, because they still have an objective to get to on the up end. So there will always be these spaces. So this space here is an indication that the pressure is too high. Not for me, that's an indication of what the pressure is. The pressure is still, the buy momentum is still immense, right? So when price comes back into, it only allows it to get to 50%. And see what it does at 50%. Look at what it does. It comes, it tests a low, it leaves an equal low, and then it comes and takes out those lows. So 1, 2, 3 lows get taken out with one stab. inside of that fair value gap that we have shaded in this pink, because the fair value gap starts at least where it should start is around these breaker blocks here. So that's why I've anchored that pink area from this. That fair value gap acts as a repellent, not a magnet. It's doing the opposite now. Instead of attracting price for it to want to close it in properly, it's saying nah, the buy momentum is intense, so we're going to keep buying, right? So I hope you guys understand where we are currently with this price action. Right? We've ran out lows inside of a price range, the extension from this low to this high, inside of a retracement that's already fulfilled a discount array. A discount array can also be equilibrium, guys. In fact, it can just be equilibrium. Price just needs to get to 50% before it moves again. That's how far it's willing to go. That's how far it's willing to mitigate a fair value gap. You get what I'm saying? So this fair value gap gets mitigated. This is why I've changed my color to pink. You understand? So inside of that fair value gap is this area that I've shaded in white, where all of the price action that ensued before the buy. The run on those lows, re-establishing more buy positions inside of a fair value gap at 50% of the price range extended from low to high, and price immediately starts to buy. You guys understand? Alright. So this is a daily chart, so there's still a lot of context. So you can see now I was paying attention to all of this price action here. You get what I'm saying? So now we see that price is actually running from that for that high that I mentioned. The next area for liquidity to get attacked is above this high. You understand? So we're going to look for a setup now. So when we're looking for a setup, we make sure that we have everything that we need on the daily delineated by any kind of whatever. So you guys can see all of this is clear. You see it's clean, it's clear, it's visible to us which levels are sensitive, and it's also visible to us what are we expecting. So I'm going to change these colors here. Let me see. I'm going to change them to the same color as this one. So I want to see what color it is. It's light pink. Okay. So I'm going to change these colors. Yeah. Light pink. Sorry, not peach puff, light pink. So that we know that those are PD arrays that have been used previously. Sensitive PD arrays. So light pink. Perfect. Here's another one. Light pink. Perfect. So you see how they were stepping, step, step. It's like a step ladder. So once they got above the threshold of this order block here, indicated by this gray box. See this big one? That is a monthly order block. Now that we're seeing the price that's being compressed on the monthly inside of the daily and the weekly, we can see what they were actually doing is they wanted to get outside of that order block. They wanted to push beyond that order block because that order block acts as a PD array on a monthly for a long-term objective. What do I mean? Let's go to the month. I get it, we have that order block here. So if price is going to continue pumping and closing in these imbalances on the sell side, it's going to use that area as an area of confidence. So they want to get outside of that order block to validate it as an order block. And yet, I hope you guys are following. There's a lot of context. There's a lot of information there's a lot of information that I'm overlaying to you guys, man. So that order block is still here on the weekly, yeah? But on the weekly, we can see that there were a bunch of order blocks inside of that monthly order block. We have one order block here. We have another one here, right? So we have two order blocks inside of the monthly order block that confirm weekly price action. So price was actually pressing up against the upper end of that order block on the monthly until they broke out of it. Once they did, they didn't allow price to go back to it in any way because the pressure is too high. You understand now? why this fair value gap never really got mitigated properly. Do you understand? Alright, cool. I hope you guys are getting me, man. I really do, because like that would be perfect for me. Alright, so here's our daily chart, guys. The daily chart looks beautiful. I love it, and you can see the lipstick is clearly defining to us what's going on. So after this retracement, price is now currently breaking structure above this high. It wants to take out that high. So we could get inside of a continuation trade right here. The least likely scenario is for price to find a premium array up here somewhere, maybe on the 4 hour, the 1 hour, and potentially retrace just for a betiana, closing this fair value gap on the buy side and buy again for another pump. But if the pressure is too high, in the sense that I want this monthly candle to print bullish and completely overlap this one previous month, if it's going to do that, it's not going to give it a chance. Alright, even on the weekly, you can already see there's already, it's like a bull flag, right? It's already giving us indications of a bull flag. Price this week is more likely going to print bullish and break that high and break structure above the high, confirming our suspicions even more. So there is potential that we could get inside of a continuation trade here. So how would I get inside of a continuation trade? I completely disregard the imbalances, because now I know what it is. The pressure is immense. Yeah? Hey, one more thing. Remember that high, those highs that I was talking about initially? That once price breaks above them, they will become resistance turned support. You see how price is sensitive to those levels here? You see how it's just like bouncing on top of that level and using it as support before it propels price higher? That's exactly what I was talking about, guys. So a bunch of confluences are making sense for me for the need to want to find a buy setup, right? Now, just like anybody else, I will not just get inside of the market without a proper idea of where, right? So I would be looking for something like this, like a retracement thing, but there's a potential that we might not get a retracement at the same time. And then we could also move here, right? So I'm looking for something like this, but there's also the potential that this might not happen, and only this is what's currently happening. So we could potentially look for a continuation trade. I'm not a fan of continuation trades because they they give me a lot of anxiety. Not knowing where exactly to get in, and then but anyway, we're gonna find a trade, guys. Right now the 4 hour is telling me what we should get in. Ne? It's telling me get in now, because we're about to break the high of that high where I say buy side liquidity. It's just above this high, right? Now price, we can see on the 4 hour, it's easier for us to see what it's actually done. Now we still have our fair value gap on the buy side after price ran out those lows, change of state of delivery, shifted market structure shift, then it started to attack these highs, closed in on fair value gaps on the sell side. Not on the sell side. There's not really any fair value gap on the sell side to get closed in, except that the highs are getting attacked. So what's happening, Gehor? We're getting something like this. Yeah. We came from sell side like this. Yeah. I'm gonna try and squeeze my illustration inside of this so that you guys can see properly. Yeah. So what did price do? So initially we had this kind of movement. Yeah. We had this kind of movement like this. Dip. So like this. Alright, so we had a sweep below the lows before price decided to do what? To reverse. Sweep total sweep buy, sweep below the lows, and now the highs are getting attacked. And yet, now the highs are getting attacked. You get what I'm saying? So these highs are getting attacked. So there's not really a fair value gap on the sell side to indicate a willingness to close in any fair value gaps. So based on this structure alone, we can see that price is revving to go higher and higher, and there's nothing that we can do to stop it. Right? We can either be part of the trade right now, or we could just wait for a retracement, an optimal trade entry, and that's where we're gonna find a proper entry. But right now, I'm itching for a trade, so I can't help myself. I can't help myself, man. I need to find something. Right. So when price came in, took out the lows inside of that fair value gap, it immediately shifted. You know, it closed in a fair value gap on the initial run below the lows. The initial run below the lows has a sell side imbalance, a buy side inefficiency, right? It has a CB. So when price comes back and close it in, it retraces for a bit. So the buy program begins. I get the same thing we did before previously with measuring the extensions for the buy. We're going to do the same thing, and we're going to figure out where did price look. It came back to deep 79% retreat. It came back into very deep discount, and then it bought. It attacked. Once it bought, what did it do? It attacked this high. 1. It attacked this high. 2. It closed in this fair value gap as well here. 3. Another objective fulfilled, and then 4. It attacked this high. So it's doing 4 things at once in that whole extension. But let's look at this consolidation, man. So since it is doing 4 things at once, then this fair value gap has no meaning for now. Now when we see it on the daily, it's there. It's clear. There's a fair value gap, man, on the buy side. It's here. Let me change it to green. But the pressure, the bullish prowess is intent on getting market price above the marketplace, above areas that would be resting, like anything liquidity resting above old highs. That's where price is revving to go, right? Like above these highs as well. You see. So let's go down to so that fair value gap because the initial push up was fulfilling 3 things at once. Okay? This one here with the initial sweep and then that push into, it was closing in this fair value gap. So that was the only objective that was being defined on the 4 hour. Now, when you see this on the 4 hour, you think, nah, sorry. So it'll have a retracer. They retrace back into deep discount. Why? Because they want to get more orders to attack the buy side. They attack this buy side here. Boom. That's the first objective. They attack the next buy side too. Without a trace, you see, there's not much of a retracement. There's just this wicking back and forth, so there's not really an opportunity to get in properly, especially since this is the 4 hour chart. So you don't really find a pretty array to work off of, except that this area here, after this break of structure above this high, price was only allowed to hit that breaker block here before it extended once more. So they took out 1, this high here, 2, this high here, closed in on a fair value gap, another one got mitigated right here. See, it gets mitigated just before price consolidates. It gets mitigated first. The high gets almost attacked. It doesn't get really attacked. So it gets close to the high, near to the high, and then it starts to consolidate. And then it's like, we're gonna take out that high. We take it, they took it out. And then they retraced once more back into that consolidation. So this is a balanced price range. So we treat it in relative to high and low. Where would the PDA reside inside of that 4 hour consolidation? Okay, because it's a 4 hour consolidation and price broke structure above it again. Yeah? So it's pressing to go higher. I need to get rid of this. copy and paste. So you guys need to see this. Alright, so we don't pay attention to balance on the buy side on the daily. That's not what the narrative is currently saying. It's telling us that a price is predisposed to go higher. Yeah? So let's take a look at this consolidation area here for a bit by dropping down into an hourly chart. Can you see it? You see, now the price was only allowed to get to a particular level, right? After it mitigated that fair value gap, it uses that same fair value gap as an inversion. It inverts, it becomes an inversion fair value gap, and it works around that area. It works inside of that inversion fair value gap, right? It works inside of that fair value gap. It pumps, takes out the highs, takes out the previous high, right? Immediately after it does that, it retraces back to a premium, a discount array inside of that price range or that balanced price range. What does it do? It comes back to deep 79%, just like how it did here. So what is it doing? It's revving to go higher, and so it does. It actually does. It actually goes higher. 79% retracement, deep, boom, break of structure. Yeah? So once price broke structure, you can see that it's stepping. So let's go back to the 4 hour because this is now where I start looking for potential setups. So this bearish short block here, inside of that price range, above that inversion fair value gap, it's inverted because we're stepping off of it, right? We've already mitigated it with this bullish candle here. Once we consolidate it right on top of it, it acts as support, right? That inversion fair value gap, right? And now price is stepping off of it, and there was this sell candle here. That last sell candle before the buy is a bullish order block. So let's mark it as such. That is our bullish order block. And change it to gray. So if price comes back to that level, that's where we could potentially find a setup. You guys understand? Now the candles look different when you drop down to the lower time frames, like the 4 hour, the 1 hour, the 13 minutes, 15 minutes. When you're looking for a setup, especially when you're trying to execute in the moment, these levels become much more I don't know what to say. I don't know what to say, honestly. They just become something. So what is our projection on the 4 hour? Well, we expect price to potentially come back into that discount array, hit it, and then continue with the buy. You see how simple it is? You see how simple it is, guys? Hit that premium array, discount array, and potentially continue with the buy from where it's currently at. Look at the 4 hour candle that's currently printing, right? It looks like it wants to push again. It looks like it rebalanced this one, né? But look at the one next to it. This bullish candle here, can you see it right here? That's inside of that order block. And look at the one next to it. This wick, this doji right here. When price was being suppressed, it was being suppressed but only allowed to go with the next candle's print. It was allowed to go at least above the previous high of the next candle that it prints higher. So technically speaking, the volume that was being kept inside of this doji is inadequate to be considered as a balanced price range, because the pass-through of this bullish candle completely violates that. So this bullish candle is a sentiment on its own entirely. So why do I say that? If you had this bullish candle, it break at the previous high, it becomes that break of structure, not the one that's next to it on the this doji doesn't. It's not a break of structure. This one is the one that becomes a break of structure. So because it's the break of structure of the previous high, there's a fair value gap inside there. You guys might not see it, but it's there. So I'm gonna mark it out in pink so that you can see it in white. because it's gonna be denoted in white, and you guys are gonna be able to clearly see it properly. It's not letting me. It's not letting me like properly put my anchor, my. So I'm going to do it manually and then move it. But first I'm going to change the color to pink. So you guys can see it. It will be shaded in white. Do you see it? Do you see the fair value gap? Can you see it? Alright. So below the fair value gap is our discount. So we're looking at the most likely scenario for right now, isn't it? This is what we're looking for, right? Should the next daily candle or the current daily candle, once it closes, print another candle, will probably come back for a rebalance of this candle. Yeah, you understand what I'm saying? Kind of like how this one wicked inside of this bullish candle. There will be another one that will probably wick inside. But on the 4 hour, what are we looking for? Okay, so on the 4 hour, we're still seeing there's potential for price to continue pumping higher and higher and higher into that buy side. Right? But if we are looking for an entry, the potential for a retracement back into a PDRA, it's still there. Because if we measure our extension from the low to the high, equilibrium is inside of that bullish order block. And right above equilibrium is that fair value gap, and price could just come tap just a little bit and then move. That's our projection, isn't it? Let's move down to the 1 hour. You can see that even on the 1 hour, inside of the 1 hour, can you see that fair value gap? It turns into a pink one. But on the, if I do this, if I extend, yeah, just like that, can you see that fair value gap? There's an auto block inside of this retracement here before the break of structure. There's an auto block. It's right here. A 1 hour auto block. This is where I'm potentially looking for price to retrace to before I find a buy setup. So I'm gonna wait for price to give me indications of wanting to get to that level, and then we'll see. If the pressure is too high, then it's fine. We just let it go. We won't have a trade at that point. But you can see there's an auto block here. I don't know if I need to mark it out, but let me just do it for completeness sake. There's a 1 hour auto block here. There is it. And it's inside of that 4 hour auto block. It's right there. Can you see it? Cool. So this is our setup, guys. We're gonna wait for it. Let's look at the 30-minute. Yeah, we're just gonna wait, man. There's another 30 auto. There's a 30-minute auto block as well inside there. Inside of that 1 hour auto block, there's a 30-minute auto block as well. Inside of that bigger 4 hour auto block. So should price want to come back and deliberate a little bit more around those levels, that's where I'll probably potentially take my setup for a buy. Alright guys, so this was pretty much it for today for our advanced ICT tutorial on synthetic markets. And if you guys liked what you saw, please don't forget to leave a like, subscribe, and a comment down below on the comment section. Let me know that if you guys appreciate the kind of content that I'm giving you to continue uploading more. We're just doing this for self-education purposes to try and improve ourselves as traders and see how far we can go with the journey. So until next time, guys, thank you for tuning in. If I will take a trade anytime, I will probably upload a video tomorrow to guys show you how I executed my trade. Alright, so until next time, guys, ciao.